Well, the Dow Industrials rising for 4 straight trading days and set its 6th record close of this year. How far can the rally go? Will it continue? We go right to Art Hogan, Chief Market Strategist, Wanderlich Securities. Art, good morning.
Good morning, Nicole.
You've been doing this so long. We are at new levels, continuing to soar. Where are we headed?
Well, I certainly think we've got a path of least resistance that's higher, and I think a lot of that's driven by the fact that we've actually got an economy that's improving, earnings that are improving, but we also have a credible possibility of some pro-growth policies being put into place. And I think that's where you need to step back, remove some of the noise, and think about some of the larger themes. If, in fact, we get tax reform, if, in fact, we get infrastructure spend, and if we get a bit of deregulation, who is that good for? And I think that's why the financials have done so well in the early go here, as has industrials, and I think technologies probably fit into that mix as well.
You know, it's interesting, Art, that a lot of people say, oh, the market's at these record highs, everything has to be great, investors are so confident, but then you can also make the argument that we haven't seen a 1% move in either direction for any of the major averages in 46 days. That is a very long streak of that kind. What does that suggest to you?
Yeah, you know, we talk about the VIX being at ultra low levels, and this move higher certainly has been gradual. I think the only real move we've seen is just post the election, when we had that real knee-jerk reaction to the surprise election results, and I think since then we've just melted up. I think that's probably natural. I think it's, you know, if we were to see a great deal of volatility, it's probably going to be intraday, because it feels like the energy is really working its way into rotating into the sectors that'll do well if we do in fact get some
you're pointing about
new
the
policies.
Sectors that will do well, and let me jump in there and say, if I'm to invest, you seem to be hot on tech, which is in vogue, and avoiding some of the dividend darlings. Can you explain?
Oh, sure thing. So, you know, we largely believe that we're in a rising interest rate environment. We heard Janet Yellen yesterday. We'll hear her again today. We think the natural course of events is for interest rates to go higher. That does not bode well for some of those bond surrogates that have done very, very well over the last 3 or 4 years. So I think that trade continues to unwind. The flip side of that, though, is financials. I think a rising interest rate is certainly good for financials. We're just now getting back to their 2007 levels. I think the runway is long for them. I also think it's good for technology, and I certainly think if we even get a hint of infrastructure spend, the industrials continue to outperform here.
How many interest rate hikes do you see coming in this year, Art?
Well, I think that we're being guided to 3, and I think that probably makes sense. That's obviously dependent on the fact that we continue to move towards our goals in both employment and inflation. It certainly feels like that's the case. So I would say we're probably going to see 3 this year, and the first one probably happens in March.
All right, well, let's hope that the rally doesn't get derailed for all of our viewers investing for the long term. Art Hogan, Chief Market Strategist at Wanderlich Securities. Thanks, Art.
You bet.